A very warmest welcome to everyone in my new video. Today we are going to talking about FMCG, fast moving consumer goods. Okay, now starting with the introduction part. The Indian FMCG industry witnessed significant changes through 1990s. By the time of 20th century, Indian FMCG industry have changed significantly with the liberalization and growth of economy, the realization of the customer growing interest and the need to meet changing lifestyle required the FMCG producing companies to formulate customer centric strategy. These changes have positive impact leading to the rapid growth in the FMCG industry. The FMCG industry plays a significant role in shaping country economy and development. This sector can drive growth, enhance quality of life, create jobs and support penetration of technology. The short term liquidity implies the capacity of the firm to repay the debt of a short term creditor and trade payables. Long term solvency implies the capacity of the firm to pay off the claims of debenture holders, preference shareholders, and long term creditors. Okay, nature of industry. FMCG sector generally deals with FMCG product or fast moving consumer goods. Okay, FMCG products have a quick turnover and relatively low cost. India's FMCG sector is fourth largest sector in the economy and contribute to around 3 million employment opportunity. FMCG market is in excess of rupees 85,000 crores. It includes household care, personal care, food and beverage. FMCG industry is characterized by a well-established distribution network, low operating cost, lower per capita consumption and intense competition between the organized and unorganized segment. Player of FMCG industry. Okay, there are top 3 FMCG industry. The first one is Hindustan Unilever Limited, second ITC Indian Tobacco Company, third Nestle India. Bottom 3 FMCG industry. First, Britannia Industry Limited. Second, Procter and Gamble Hygiene and Healthcare. Third, Marico Industry Limited. Now, starting with Hindustan Unilever Limited. It is India's largest consumer good company based in Mumbai, Maharashtra. It is owned by the British Dutch company Unilever, which controls 52% majority stake in HUL, Hindustan Unilever Limited. HUL was formed in 1933. Its products include food, beverage, cleaning agent and personal care product. Revenue 22,116 crores. Net income 2,691 crores. Employs more than 16,500. Hindustan Unilever distribution covers over 2 million retail outlets across India directly and its products are available in over 6.4 million outlets in the country. As per Nielsen market research data, 2 out of 3 Indians use HUL products. In 2012, HUL, it means HUL means Hindustan Unilever Limited, okay? So don't confuse, was recognized as one of the world's most innovative company by Forbes. With a ranking of number 6, it was the highest ranked FMCG company. Now ITC, Indian Tobacco Company. It was formed in 1970 by Henry Overton, Will Wills and Yogesh Chandra Deveshwar and chairman, headquartered in Kolkata, West Bengal, India. Okay, in FMCG, ITC has a strong presence in cigarette, okay, cigarette, WD and HO Wills, Gold Flake Kings, Gold Flake, Premium Navy Cut, Insignia, India Kings, Classic. In classic cigarettes like Verb, Menthol Rush, regular Citric Twist, mild and ultra mild, and 555. Benchon and Hazes, Silk, Cut, Caesar, Captain, Berkeley, Bristol, Lucky Strike, Player, and Flake. Food is like these are the cigarette company basically. Now what are the food items under ITC, Indian Tobacco Company? Kitchen of India, Ashirvad, Minto, Sunfist, Candyman, Bingo, Yippee, Sunfist, Pasta, Brand, brand in ready to eat staples biscuit, confectionery, noodles and snack food. Apparel, Will's Lifestyle and John Player brand. Personal care, okay, Fiamma de Wills, Vivel, Essenza de Wills, Superia, Vivel de Wills brand of product in perfumes, hair care and skin care. Stationery, Classmate and Papercraft brand. Safety matches and agarbattis, okay, Seep, Mangaldeep, Am brands. So these are basically things that will be used by Indian people. Okay, now Nestle India. It is multinational nutritional and health related consumer good company headquartered in Vevey, Switzerland. It is the largest food company in the world measured by revenues. Nestle was listed number 1 in the Fortune Global 500 as the world's most profitable corporation. Nestle products include baby foods, bottled water, breakfast cereal, coffee, confectionery, dairy product, ice cream, pet food and snacks. Nestle India's first production facility was set up in 1961 at Moga, Punjab. The Nestle India head office is located at Gurgaon along with other branch offices in Delhi, Mumbai, Chennai and Kolkata. It has 2,50,000 employees, 500 factories and 8,000 range of product across the globe. Okay, Britannia Industry Limited. It is an Indian food product corporation based in Kolkata, India. It is famous for its Britannia and Tiger brand of biscuit, which are popular throughout India. Britannia has an estimated 38% market share in biscuit segment. Product is like, what are the product under Britannia Industry Limited? Okay, bakery product including biscuit, bread, cake, rusk, and dairy product including milk, butter, cheese, ghee, and dahi. Okay, the company was established in 1892 with an investment of rupees 295 only. Okay, the brand name of biscuit include Vita Marigold, Tiger, Nutri Choice Junior, Good Day, 50/50, Treat, Pure Magic, and Milk Bikis, Good Morning, Bourbon, Thin Arrowroot, Nice, Little Heart, and many more. And revenue is 4,670 crores and profit is like 134 crores. Okay, and now other company, Procter and Gamble Hygiene and Healthcare. P&G is one of the largest amongst the fastest growing consumer goods company in India. Established in 1964, P&G India now serve over 650 million consumer across India. Its presence spans across the beauty and grooming segment, the household care segment, as well as the health and well-being segments. These include Vicks, Ariel, Tide, Olay, Gillette, Ambipur, Pampers, Pantene, Oral-B, Head and Shoulder, Vela, and Duracell. Okay, P&G operates under three entities in India: two listed entities, Procter and Gamble Hygiene and Healthcare Limited and Gillette India Limited, as well as 100% subsidiary of the parent company in the United States called Procter and Gamble Home Products. Okay, Marico Industry Limited. Marico is an Indian consumer goods company providing consumer product and service in the area of health and beauty based in Mumbai. Founded in 1987 and headquarter is at Bandar, Mumbai, India. The organization hold a number of brands including Parachute, Saffola, Hair and Care, Nihar, Medicare, Revive, Manjal, Kaya Skin Clinic, Aromatic, Fiancee, and Hair Code, Eclipse, X-Men, Hercules, Shyville, Code 78 and Black Cheek. Revenue is 4008.3 crores. Okay, Parachute is the flagship brand of Marico, which consists of edible grade coconut oil. Okay, now market share of FMCG industry. Okay, what are the share stakeholder of all these companies? Like Hindustan Unilever Limited 36.4% market share, Indian Tobacco Company ITC 30% share, Nestle 8.2% share, and Britannia 6%, and other will be including 19.4% share. Okay, now the FMCG market has three main segment. We are already aware with, like food and beverage 18%, healthcare 32%, and household and personal care 50%. Okay, marketing strategy process. The first thing, understand customer. Okay, analyze market and analyze competition, research distribution, define marketing mix, financial analysis, review and revise. Okay, now geographical spread. FMCG is the fourth largest sector in the Indian economy. Household and personal care is leading segment accounting for 50% of the overall market. Healthcare 32% and food and beverage 18% comes next in the term of market share. Growing awareness, easier access and changing lifestyle have been the key growth drivers for the sector. Okay, retail market in India is estimated to reach United States dollar 1 trillion by 2020 from USD dollar 600 million in 2015, with modern trade expected to grow at 20% per annum. This is likely to boost revenue of FMCG company. Okay, a strong growth in the Indian FMCG sector. The FMCG sector in India generated revenues worth United States dollar is like 47.3 billion in 2015. Okay, over 2012 to 16F, the sector is expected to post CAGR of 11.9% in revenues. Okay, in 2017, revenues for FMCG sector is expected to reach $50 billion. Now, branding strategy. Some of the major strategy adopted by FMCG company for making their brands outstanding compared to competition are as follow. Okay, first, multi-brand strategy. Second, product flanking. Third, brand extensions. Fourth, building product lines. Fifth, new product development. Sixth, product life cycle strategy. Seventh, taking advantage of wide distribution. Eight, sales promotion. Okay, position and differentiation strategy, P&D strategy. Okay, position and differentiation strategy can be conceived and developed in a variety of ways. It can be derived from the object attributes, competition, application, the type of consumer involved, or the characterization of product class. There are seven approach to positioning and differentiation strategy. Okay, using product characteristics, pricing as a positioning strategy based on use or application, positioning strategy based on product process, positioning strategy based on product class, positioning strategy based on cultural symbol, and positioning strategy based on competitors. Okay, now, pricing policies. Pricing is the exchange value of the product. It is the amount of money needed to acquire a product service. Pricing is the most important strategy in the rural marketing. Pricing must be compatible with the marketing strategy, includes target market selection and positioning. This should have a balance between quality on offer and price. First, customer segment pricing. Second, product form pricing. Third, economy pricing. Fourth, value pricing. And fifth, differential pricing. Now, total capacity of industry. In 2015, revenue from consumer durable sector in India stood at $9.7 billion, which further increased to $12.5 billion in the year 2016. Okay, consumer durable market expected to grow at CAGR of 13% from fiscal year 2005 to fiscal year 2020. Around two-thirds of the total revenue is generated from urban population and rest is generated from rural population. Future prospect. The only threat to this strong growth trajectory remain the high portion of unorganized trade, the limited distribution network of new entrants, and the pressure on profit margins due to increasing competitions. But these are likely to be of diminished importance as proportion of organized trade increases and players invest in improving distribution. Okay, going forward, the industry prospect remains attractive and the new graduates can hope to leverage the training and on the job learning at the leading player in various functional roles across the metros as well as in the interior heartlands on India. Porter's five forces models. Okay, industry competitors, buyers, substitutes, suppliers, and potential entrants. Okay, constraints. Identify the system constraints as per Dr. Goldratt. Until the consumer has bought, nobody has really sold. The system constraints found is in market demand or the no of consumers willing to buy. Decide how to exploit the system constraints. Exploiting the system constraints means having the right SKU at the right place in the downstream supply chain and the right time when consumer is willing to buy. What conditions block better exploitation? Shortage of product already stocked by the downstream supply chain member, unavailability of product that sell elsewhere but which is not stocked due to shelf space constraints occupied by surpluses. Professional trade bodies of the industry. The Indian FMCG sector is the fourth largest sector in the economy with a total market size $18 billion. FMCG industry is expected to maintain a robust growth rate as the population is increasing. The organized sector is account to 14 to 18 of the shares. However, it witnessed phenomenal growth rate in the next half of the decade. Overall, the FMCG industry is expected to increase at a compound annual growth rate at 14.7%, with a rural FMCG market expected to increase at 17.7%. SWOT analysis: strength, low operational cost, well established distribution network, strong brand and large market. Okay. Weakness: high advertisement cost, low export level, lower scope of investing in technology. Opportunities: large domestic market, rising income level, online social network. Threat: tax and regulatory structure, rural demand is cyclical in nature. And third, different monsoon. Now, what are the conclusion? Okay, after this all thing about FMCG, it is high risk area but with the promise of a large consumer following as the prize for those who succeed. The key to reducing the risk is to understand the market, the consumer need and behavior. The consumer group differs by occupations, income, social and cultural grouping. More and more people these days have started involving themselves in this field as it creates tremendous job opportunity for them. Okay, now thank you very much to watching my video about fast consumer goods, FMCG, fast moving consumer goods, and keep sharing this video with your close friends, family member. Thank you very much.